This is Laricy Live, and I'm your host, Matt Laricy. We're giving you unfiltered access to the world of real estate, where we can cover the market trends, news, and honest answers to keep you ahead of the real estate game. Laricy Live is brought to you by Lincoln Title. Lincoln Title is the best and most efficient title company in Chicago and is the best place to close your property. This podcast is brought to you by Titan Builders. Titan Builders have been remodeling condos and homes in the Chicagoland area for over 35 years. Whether it's remodeling your kitchen or bathroom or getting your home ready for sale, Mike and Mark are your go-to guys. Laricy Live is brought to you by Guaranteed Rate and Ben Cohen. Ben Cohen is the #1 lender in Illinois and can close your loan in as fast as 8 days. All right, so today we'll call him a special guest. I think this is a third time on, fourth time?
I mean, that's disappointing.
Is
It's
it
only our third
three
or
or
fourth
fourth time on?
Should be third or three or four times
Mr.
a
Ben
year.
Cohen, 9-figure Ben Cohen, richest man in Illinois, second richest man in Illinois. We're just talking about beach houses here.
Right. Which I don't have, for the record.
He's got 3 places in the Hamptons.
Yeah.
But so we thought we'd bring Ben on. Ben, thanks for coming on
Thanks
here.
for having me, pal.
To chat a little bit about what's happening in the mortgage industry. There's been a lot happening, right?
Yeah. Always a lot happening.
Now, you've been, just a quick recap in case somebody doesn't know you, you've been doing this for what, how many years?
21 long years.
And last year you finished 1 or 2 in the country? Number 3 in the country.
Yeah,
Oh,
3.
wow.
I knew you were going to rub that in my
So,
face a little bit.
The first and second guys in the country, they called.
Yeah.
They couldn't make it.
Actually,
so,
I think the number 1 guy is like a company, so I think he kind of rolls everything up underneath him. So I'm still going to go with 2.
I just let you know that as a business owner, I always state that if I wasn't number 1 or I finished that, I don't make an excuse why I wasn't there. Okay, it's just whether or not you made it or not. So,
Hey,
you call the company, the guy. The guy closed more business than you.
I listened to one of your social media things last night where you were like, there were 16,000 realtors in the city, and you were number 16,000.
That's right. Yeah,
I like that.
Yeah, and that's what it would be. I still
didn't know anything.
Yeah, I think that's a great. Don't you think that'd be a great video to do? Is that think about this? If you just got in real estate, you started as number 16,000, and you did a social media video I'm 16,000. 6 months later, you're I'm 15,750. You're gonna start rooting for this guy. You know what I mean?
I was
and he's
rooting for you.
12,000, then 10,000.
I loved your pitch.
So I just think I thought that was
you had me sold at hello on that video.
Yeah,
I was like,
yeah.
wow, that's a guy I'd hire. I guess.
So that's what I think for newer people out there in any business. I don't think it's bad to say you start at the bottom. So we got the number 3 guy here.
Number 1 in the state.
Number 1 in my heart.
Number 1 in your heart. That's all that matters.
And you've been working at a big company called Guaranteed Rate.
Yes, which is now Rate, by the way.
Which is just Rate. And
yes.
why they call it just Rate now?
Because people can't spell guaranteed.
I thought that you'd have to be an idiot not to be able to spell guaranteed, and then I actually spelled it, and I spelled it wrong. So I'm one of the idiots.
G-U-A-R for the record.
Yeah.
Most people can't figure that out.
Yeah. Listen, I'm just I'm a D student from East Illinois, so I'm okay with that. Now it's Rate.com.
Yeah.
Right. Now Rate owns the White Sox Stadium.
We do.
The rights. Before we get into this whole thing, do we know what's happening with the White Sox going to 78 or maybe to Nashville? Does Victor talk to you about that at all?
No, he doesn't know.
Okay. I mean, he just got the naming rights.
We're hopefully staying here.
Are you a Sox fan?
No, I'm actually a Tigers fan at heart, but I'm a Cubs fan.
A Detroit Tigers fan?
Yeah.
I didn't know they had a baseball team.
Yeah.
Okay.
I mean, we're in the playoffs this year. Come on.
I mean, we got to go to Florida, and we got to go to beach houses in October. We're not playing baseball. Come on, that's ridiculous. So anyway, with the loans, we've had a lot going on. We'll start off with the rates have seemed like what I would call a roller coaster ride. Right, they're up, they're down,
to say the least. Yeah.
They're going to be back by 2% next year. Is that correct?
I mean, you're always right when it comes to predicting interest rates, so I'm going to throw that back at you.
No, I don't. I think I think it's one thing that drives me nuts. Is I have clients like, well, I'm waiting for them to drop down to 2 or 3%. I'm like, the odds of them getting 2 to 3% interest rates, I think like 5-10 years from now is going to be equivalent to. Remember when your parents bought a house? Like, I had an 18% rate.
Yes.
It's like your dad. Like my dad tells me all the
Yes.
time. It's like I had to walk uphill both ways to school with no shoes in the snow.
They also spent $100,000 on a house.
Less. It was like 50 grand.
Yeah.
But they complain about these 18% rates. I think people in my generation specifically, not old men like you, but like younger guys like myself, like the 2 to 3% rates, I think is something that like you'll talk about for our lifetimes. Like it's just not happening again.
I call them the artificial days.
Yeah, like it's just there's COVID. They just like made up a number to try to like.
We are the only country that has a 30-year fixed rate mortgage product.
Right.
The only country, right?
Yeah.
So when they made these 3% interest rates, I don't think they understand the repercussions down the line that it was going to lock people in their homes for forever. If you go buy a home in Canada or you go buy a home in Europe, it's a 5-year deal. And at the end of 5 years, if the rate goes up and you can't afford the rate, then you either pay down the mortgage to make it affordable or you sell your home.
I completely disagree with what you just said, though, is that you thought they would make them stay put. I think some people will stay put, but I think they know the average person just likes to trade real estate.
100%.
Like, I think there's going to be a lot of people who are going to stay in that forever, but they would have never sold regardless.
100%.
But I'll tell you, just myself, I meet a lot of people, and they're like, I got a 2% rate. I don't want to get rid of it. Then they pop out 2 kids in a 1-bedroom condo, and they're
100%.
like, well, both kids are sleeping
when
in the closet.
I say they don't want to get rid of it, you can tell me if you agree with this or not. My theory on this is it's allowing people to say, you know what, my mortgage is so cheap and I can command a decent amount of rent. So instead of selling that home, I'm just going to rent that home.
Yeah, but
because I can afford it.
Hypothetically, they'll say that, and then what they do is they rent it for a year.
Right,
and then
they're out.
they realize it's a job, and they're like, "Oh my God, the S&P's up on average like 20%, or is it 25% this year?"
Yeah, it's
and
crazy.
They're like, "And the rate of my return is getting me nothing, and I gotta go to this house 15 times." So I actually predicted. I think 2025 is gonna be the best market since 22.
From a rate prediction standpoint, I don't think they're ever going to go to 3% unless we have a nuclear war, which is probably on the table, depending on what happens from a political season.
I don't think so. I don't think
we'll see, right? You never know.
Yeah.
I think that's the only thing that would spur that on. And I think if you read based on what all the predictions are, whether you follow Goldman Sachs or Bank of America or Jamie Dimon or any of these guys, they think that rates will probably be somewhere in the mid-5s.
Yeah.
If you look at it, as everybody may or may not know, mortgage rates follow the 10-year Treasury market.
Yep.
Okay. The Treasury market right now, I think today is trading at 4.25.
It's been on a complete rocket ship since they announced the Fed rate
Well, we'll get
cut.
to that. Yeah,
Right.
we'll get to that. So normally, and whatever the word normal means these days, interest rates are trading at 150 basis points above the 10-year Treasury.
Yep.
So if we're at 4.25, a mortgage rate should be 5.75.
Correct.
Right. Well, no, it's now 7%. So it's like
Right.
300 basis points higher.
Yeah.
So I think once kind of the world finds a little stabilization, you're going to see kind of just compression in that from that standpoint. Mm-hmm. And then you obviously have the 10-year, which is volatile. It's kind of like I feel about this election. I just want it to be over and done with and see who's going to be running the country so we can all move on and kind of start these next 4 years of our lives, whatever happens.
Who are you voting for?
But I don't know. My vote doesn't.
My
vote doesn't matter.
We won't answer that.
My vote doesn't.
But here's the thing to think about when you talk about 10-year yields. First off, I have an alert on my phone so that you get notified when it goes up and down. I don't know if you do that.
I do that a little bit.
Yeah, just to be able to see it.
Yeah.
But I have a conspiracy theory that Powell has said that he wants them to get to 5.5%. That's what he's come out and said publicly.
Mortgage rates?
Yes,
Yeah.
like numerous times.
Yeah.
But I don't think we're going to see any big drops until we have a change of guard. Because I think, this is, again, conspiracy theory, Matt Laricy talking here, but I think that he wants to drop them when there's a change of guard, so then whoever's in power, he's going to be be able to ride the new president will be able to ride the coattails of that, saying I'm the one that did this. Then he's going to be in their good grace. And we live in a Game of Thrones type of world, and that's why I think it's been holding. Because a lot of people are like, why aren't they dropping? It's like, you also have to think, okay, if I live in the political world, why am I going to drop them right this second to then who knows, that could boost one of the chances of one of them winning. The other person wins,
100%.
then you're kind of in the doghouse with that person the rest of your presidency.
It's all politics right now.
That's how I
the
feel.
fact that 2 days prior to the Fed rate cut, 10-year Treasury was trading at like 3.6%.
Right.
Right? And everybody, when we were selling mortgages 8%, we were trying to get people to refi at 6.5%. And they're like, you know what? The Fed's going to cut rates. I'm just going to wait. They're going to go lower. I'm going to go lower. I try to explain to everybody this has been priced into the market.
Right.
Don't be greedy. Don't chase a rate. You have an opportunity to save yourself $500 a month. Like, why are you waiting on something like that?
Right.
You're complaining that you were getting an 8% rate 7-8 months ago.
Right.
And now you have an opportunity to get mid-sixes and you want to chase it. And then lo and behold, they cut the rates. The consumer doesn't understand that when the Fed cuts rates, that's not a mortgage rate.
Right.
And then what happened since then? You've seen rates have gone up a full point in the last month, 5 weeks.
Yeah. So let's just explain that point really quick for the public out there that doesn't understand. Why is it that when they say they cut the Fed rate, it doesn't drop the interest rate? So the Fed rate and interest rate, they're not the same thing, correct?
They are not the same thing.
But the average person thinks it is. I'd say
Absolutely.
actually I would say 95% of people think it is.
If not higher.
Yeah.
Yes.
So what does the Fed cut mean for interest rates?
So interest rates are driven off of the 10-year Treasury.
Correct.
Okay. So at the end of the day, everybody wants to know why. Why? The jobs numbers was really strong last month.
Right.
Retail sales surge has picked up.
The economy's booming.
The economy's booming, supposedly, right? All these jobs are getting created. Listen, I deal with people all day long when financing a home. There are people out there looking for work, can't find jobs, kids coming out of school. Like, I think it's all a bunch of politics at the end of the day.
I've been losing a lot of deals lately because people have been getting fired.
They're getting fired.
And most of my so I grew up in like more of like a not rich area.
Same.
And like a lot of my friends are struggling with bills right now.
100%.
They
Most
always talk about
people
is
are.
how the economy's bad and everything like that. But the media says it's all great. So
Well,
why is the Fed rate? Why are they saying the economy's so great?
I don't know. Why did they cut 50 basis points if everything was so great?
Right.
So what do? All these jobs get created.
Yeah.
And then 2-3 months from now, they're going to do a revision and say, you know what, we had bad data out there.
Yeah.
We were off by,
500,000 jobs.
500,000 jobs. We're now going to revise it. I mean, that's kind of what happened right before the Fed rate cut. They said, you know what, the last 6 months, we actually thought we created 800,000 more jobs than we actually did, and now we're going to revise that down.
Do they even say where these jobs are coming from?
No, that's the whole spin, right? They're part-time, seasonal. These aren't full-time jobs at the end of the day. So you've just got, as you know, and as we tell all our clients at the end of the day, you have to be able to anticipate swings in the market right now.
Right.
If a rate is going to, if you make an offer on Saturday and I tell you the rate's 6.5%, and you call me on Tuesday and now I tell you it's 6.875%, if that swing is going to make or break your ability to buy a home, then you're spending too much money on a house.
Right.
It's that simple.
Right.
It really is.
How much do you think the rates will change from now to the end of the year?
Man, I don't know. I really don't know. I knew that rates were not going to get cut when the Fed did the rate cut.
It was already baked in.
But I did not think we were going to see such a sharp increase in such a quick period of time. That caught me off guard.
Yeah. So I do a weekly market update that I send all my everybody on our database. And if you're not subscribed to our newsletter, I would subscribe to it. I give a good story and talk about the market, et cetera.
Yeah.
I comment on what did I see this week, and every week for the past 5 weeks, we talk about how the rates have inched up, and now it's equaled almost. I don't know if it's definitely a full point, but it's close to a full point.
It's close to a full point. It's not. It depends on the products.
Yeah,
but yeah.
Correct.
Yeah.
Now, because rates are kind of so volatile, are you recommending people take ARMs? Because we talked about earlier that hey, we're the only country where you trade them in, but why not do a 7-year ARM if it's cheaper?
Because you have an inverted yield curve right now, so the shorter term mortgages, an ARM rate might be 1/8 of a point cheaper than a fixed rate mortgage. And
but if one's 6.5, one's 6, let's just make up numbers.
You would do an ARM,
right?
100%.
Yeah.
But there's people that just aren't comfortable with that at the end of the day.
I mean, see, the way I tell people is I could be wrong. I'd be surprised, and I'd be willing to take that gamble. But I think in the next 7 years, there will be an opportunity to refinance.
There's a 99% probability.
7 years. Think about how much the rates have changed in the last 3 years.
Yeah,
and then add 4 more on. And all you need is one chance
you're preaching
to refi.
to the choir, bud.
Just one.
You're preaching to the choir.
And if you could take a 10-year ARM, do you know what can happen? You could go through 2 real estate cycles in 10 years.
So
two
I'm the only idiot that didn't refinance their mortgage in the pandemic because I was too busy. So I have a 10-year ARM on my primary residence, didn't refinance it.
Yeah.
I have 2 years left on the thing. right?
Wow.
I'm at 3% on that thing.
I mean, that's still a pretty good rate.
Still great rate. So at the end of the day, I'll deal with it in 2 years. And if the rate
Yeah.
goes to 6%, it goes to 6%. It is what it
Yeah.
is. But I am always an ARM guy if there's an advantage to taking an
Yeah.
ARM. Depending on the price point, are you buying a house? Are you buying a condo?
Yeah.
Sometimes ARM rates are worse.
I can say that I got a 2% on a 30-year fixed. So I mean that's why I don't want to sell that thing. It's just like it's just free money.
Listen to you.
Like
you just
it's,
counter.
I know. I'm saying that's why. But here's the thing: it's like I don't want to sell the thing, but I know it's not financially intelligent to keep it. So like I always say like I could see why people think this way because you're like it's free money, but it's also like
Totally.
at a certain point like it's still money out the door.
I know.
Like you know what I mean? It's still going there.
A mortgage is a mortgage.
Right. And listen, if you have the financial means to be able to just piss it away, then great. But if you know most Americans, including myself, don't have that ability to be able to just like throw money aside, especially when you're running businesses and stuff. But you know, I think what's going to be interesting to watch with the rates is what's happening in the secondary markets. Right, so you mentioned earlier about Ben has like I don't know 26 or 27 beach houses across the country, but is the Florida market right? Have you watched the Florida market at all?
I mean, come on, I lend in it all the time.
So like you know I've been reading some stats and one that popped out to me was Miami's down 12% this year. Okay, so like there's a big thing that I think the rates have driven in our immediate market. Now, you live in Deerfield, right?
I do.
Okay, North Shore is one of the hottest markets there is,
and
right?
There's just no houses for sale,
And I have a lot of theories of why that is.
Yeah.
But one of the big things would be like if you were, I mean, I couldn't even imagine this, but like 10 years older than you are now, and your kids are in college, right? And you want to sell your place and get a place in Florida and get a place down here.
Yes.
As like a home base when the kids come home to college.
Yes.
And you still love Chicago, but you don't need that 8,000 square foot house, right?
No.
The problem is that when you wanted to sell your place and go to Florida was so expensive that like you couldn't get that home down in Chicago. So you either had to go all in Florida or you would just stay put. But with Florida's prices, really, I mean, 12% is a lot to come down, and that's just the first 7 months of the year. So by the end of the year, I bet you it's at 15 to 17%, and the next 2 years, that might be 30 or 40% down. Like it could be, right?
I always say Florida is like the first to go down and the first to come back.
Right.
I mean, the peaks and valleys in Florida are insane.
I think that's why investors love it because, like, you don't go to a casino to only make like 1% on your money that you put down in blackjack. You put it down to double or nothing, right? And people like that.
Right.
But my point is that I think a lot of people, with the Florida markets kind of shaken down, is these empty nesters are gonna buy in Florida, and then buy a second place downtown, and then that's gonna free up people to be able to, it's like a cycle. Then people can buy back up there. Yeah. And I think if the rates, that's why I think 25 is gonna be one of the best years we've seen since 22. Is that I think if the rates get to a low 6%, that my bank of 2025 being one of the best years is we need that to happen.
I mean, Matt, look what happened I don't know if you saw this, but when rates were 6% a month
3 weeks
ago,
4 weeks,
all of a sudden I was like, shit,
We're like,
phones ringing off the hook,
like,
people
what
wanting
happened?
to buy.
Yeah.
I mean, it was just crazy. And then all of a sudden it's over in a blink of an eye. And it will come back, whether that's after the election. I personally don't think we'll know the results of the election for a month until after the election's over.
You have an election party?
I was talking to a customer yesterday, and they're dropping off their ballot at the post office drive-through. Mm-hmm. And I found this fascinating. Whoever was at the drive-thru was like the car broke down and it was stuck. And the person came out and said, you know what? He said, one of the post office workers came out and said, I'm here. Can I help you? I'm here. I'll take your mail. No, it's not mail that I want to put in the box. It's actually my ballot. Oh, I'll just take your ballot for you and I'll throw it in the thing. He's like, absolutely not. Yeah. I want to put the ballot in the ballot bags on my own.
Listen, so, a lot of people are still crept out about this. But so what do you think? Do you think the election has a big impact on where the rates stand right now?
Yes.
In like what
Personally,
way?
I do.
Do you believe my conspircy theory at all?
I do.
Could you buy that? Let me put it that way.
100%.
Yeah.
I absolutely believe everything going on right now has all to do with politics. And at the end of the day, I think the reason we're at this, I don't believe the data that comes out personally. I don't believe the economy is as strong as it is. Yeah. I still think inflation's out of control. I think unemployment is much higher than they're alluding it to be at the end of the day, because you and I deal with it all day long. People buy a home and they call you a week later and say, I lost my job and now I can't buy the house. Yeah.
And it's terrible because like you actually don't even and sometimes like I get really frustrated, and I don't get frustrated with my clients, but like I get frustrated when like you work with somebody for like 4 or 5 months and super difficult trying to find a place. You finally find them a place. Yeah. And then the deal dies because they lost a job, and it's like I get frustrated because I'm almost like, what do you mean you lost your job? And
Yeah.
I've said that once. I was like, what do you mean you lost your
Yeah.
job? And the reason I said it like that is because like I think we're so into like just the media tells us so much that like it's impossible to like hire, not to find a job, but you can't find anybody to work. That like when you hear that it's the opposite, you're almost like I was confused. But I've been hearing it a lot lately.
Yeah.
Especially in the tech sector.
Yeah.
Like big time.
It's a big deal out there right now. It's just not being talked about.
Yeah.
So.
But I think the election plays a large part into it. I think that's why I had a theory for a while about what I would dub the frightful fall. And there's a lot of realtors talking about, and some loan officers like, oh, I'm having great months. Well, it's like, listen, you're not the first or second, but you're the third biggest lender out there. You're always going to be busy because you're one of the top guys.
Yes.
Like, I always tell people, like, I can tell you how awesome I am, but just because I do really good at my job, that's not the market. We can't, and that's a big problem for realtors and lenders.
Or microcosm.
Right. They talk about, like, how great they are, but, like, what's actually happening in the marketplace? I look at I'm a data guy, so I look at showings, okay?
Yeah.
So we carry 100 listings at any given time, okay? In the spring, let's call it January to May, we're averaging about 40 showings on our listing sometimes, okay, on a weekday, okay? Today, we have like 5. Like, it's a pretty big difference, like an astronomical difference.
Yeah.
So how can you tell me that you're busy?
Yeah.
Because if I got the most listings, the biggest market share in the city, and I can tell you that like our showings are like a fraction of what they are in the spring, like, why would you not say that's a frightful fall?
Listen, I tell everybody right now, we're busy. There's just a lot of demand. There's not a ton of supply, depending on where you're looking, right?
It's very segment. You're looking at North Shore, you got a $500,000 budget in Lincoln Park,
Yeah. So at the end of the day, our business is difficult right now, and it's been this way for a while because it requires so much homework up front. As you know, I like to do my homework up front before we just send a pre-approval to a client instead of just saying, it's not push button, get mortgage like people think it is at the end of the day.
But that's what it says online.
We'll talk about condos if you want to talk about that. But, there's just a lot of different things that go into it. So the database that we have of people actually out there looking for homes is massive.
Yeah, I mean,
whether they're waiting for rates to come down, whether they're waiting to find their house, whether they're waiting to sell their house. I mean, at the end of the day, there's a million different reasons on why people are on the sidelines. So,
well, my big problem with buyers out there right now, and I don't mean this in a bad way to our clients, but like a lot of buyers are frightful right now, and they're what I call the Texas two-step, where they want to buy, but they're nervous because the rate went up 1%, right?
Correct.
But so they want the rates to drop. But then when the rates drop in January, February, your demand goes up by tenfold. The prices go up. So like, okay, so I always break it down this way. If you buy a place, how long does it take you to refi? 6 months is the quickest, right?
Yeah.
So if you pay, let's say, an extra $2,000 in mortgage rate, let's just use an easy number. And 6 months later, you could refinance at a lower rate. Or you wait till February to buy, and now you got so much more competition, you pay an extra $40,000 for the same property, which is cheaper because now I went to Eastern, but at 40 minus 2 is 38, right? So like you save $38,000, right? That dog comes by every day. It drives me crazy. But like my point is like that's how people should be thinking.
So there's a couple taglines I use, which everybody's stolen from me, and I feel like I've coined these: marry the house and date the rate.
Yeah.
Everybody's stolen it from me. 100. I think I said that last time I was on this podcast. I should have trademarked that damn line.
I mean,
and then you cannot.
I think the number one guy did.
You cannot refinance your purchase price.
Yeah.
So that is exactly what you're talking about.
Yeah.
You buy a $500,000 home today, and you pay 7%. And in February, when I go buy that home, because now rates are 6%, that $500,000 home might be $525,000.
Yeah.
So do the math on that, right?
Yeah. I mean, but that's what I try to teach people is, and I get it. Listen, like people are always like, oh, well, you're in a different position, blah blah. It's like, listen, I didn't grow up with cash, and I certainly didn't like.
I grew up in wonderful Toledo, Ohio. Okay.
Yeah, I'm saying like like we all
really Toledo.
Like Jesus.
No way. I knew I liked you.
People in Ohio.
Wow. We breed good people in Ohio, by the way.
I don't know.
Hence why you've got 2 of the 3 out of from Ohio.
I don't know what's happening in here right now. I'm a Chicagoan. But my point is, what I try to teach people is that, like, we can't worry about the rates in a sense because they will change always.
Yes.
Like I always tell people, buy when you feel financially comfortable
100%.
to buy. And some of the details can be figured out later. Like a big thing that I see right now is that everybody I'm meeting, I would say as much as 80% of people, their leases are up March to May.
Yep.
Okay. And they all don't want to buy till January, February. And what I tell people is like, listen, you and everybody else are going to be in that position.
Yep.
Right? So do you know how much more competition? They're like, well, I got a lease. I said, well, how much is your lease a month? They're like, well, it's $3,000 a month. I'm like, okay, well, let's say we close end of December or January. Let's use January as an example.
Yep.
So then you're going to eat 4 months of rent, right?
Oh, by the way, if you close in January, your first mortgage not till March 1.
Right. So like,
just FYI.
But even let's just play the game of like February to March.
Yep.
Let's say you eat 4 months of rent at $3,000, right? So it's like, now we're talking about how much is that? What's 4 times 3?
12.
Okay, so we're talking $12,000.
You just really tested me there. I got nervous for a minute. I'm
We're
not real good at math.
We're throwing math problems at the numbers
geez.
guy here. So you're looking at, okay, now you could eat $12,000, right? Or you could sublease it, right? Or you could try to work out a break.
Yep.
But like, because you're now going to be competing against all these people, right? If you could get a place for $20,000 cheaper today than you can in March, and you got to eat $12,000, you're still up $8,000, right?
If only people listen to us.
Listen, I don't try to push people in the financial position.
I
try to put ideas out there that, like, listen, if you're financially capable to do it and comfortable, like this is what like I tell every year, and you've been doing it a while. I'm going on I think it might be my 20th year, 19th year next year.
Yeah.
And everything happens, and I tell it all my fall buyers, and then January hits, and I cannot tell you, I would go on a limb and say 90% of my buyers are looking fall. In the spring will tell me, they said, you told me how busy it would be, and I kind of thought you were a little full of shit, and like now I see it, and it's like, they're just like, I'm just not built for it, and then they just end up renting again, and then they keep chasing and chasing, and I say, listen, like some people are meant to be buyers, and some people are meant to be renters, and I do not mean that in a rude way, but I say it's like, if money is your main, you always have to focus on what is the things that drive you to want to be a buyer, and if you're worried about money, then maybe that's not for you, and that's not a negative way. There's not a negative way in any sense, but I'm saying is that like, we break that down to rates or your rents, and you have to think to yourself, what's going to put you in the best position to lose the least amount of money, right? So, this is an exercise I try to play with my buyers.
Good analogy, as I always say, is you call me and you want to buy a home. Mm-hmm. Hey, Ben, I want to buy a home and I want to move to the burbs. Ben, I own a home in the city. I don't want to buy a home in the suburbs until I sell my home in the city. Yeah. And I say, well, let me ask you a question. What's your price point? I want to spend $500,000. Okay. Right. Do you have money for a down payment right now if you don't sell your house? Yeah, I do. Okay, so why don't we get you qualified, assuming you don't sell your current home? Yeah. Even though we know that's what you want to do. Right. Let's get you qualified to, can you buy it without selling? Right? Mm-hmm. And if I come back to you and say, Matt, you can absolutely buy without selling, but you come back and say, well, I'm not comfortable doing that, no problem, right? Mm-hmm. At the end of the day, I'm going to give you your options. I'm going to give you my professional opinion. You make the executive decision on what you're comfortable with. And the reason I encourage everybody to go through that process is because if you are out there looking, as you know, right, you are going to find something quicker than you thought. Always. And you're not going to be able to line up the stars logistically and strategically. Right. And you have to be ready to go, because if you make a contingent offer, as you know, you're going to get moved to the bottom of the pile. Right. Nobody's going to want to see it. So that, as you know, that's what we do with a lot of customers at the end of the day. Right. I don't let the client be the lender. Everybody thinks they're an expert when it comes to mortgages. I know how this works. Yeah. This is what I want. Yeah. Okay, well, I'm here to just trust and validate. And, you're making an assumption. I don't make assumptions at the end of the day. So that's really what we encourage people to do when they call in and get qualified.
What are you telling people? Because you brought up a point. That's a big one, because, our business is in the city. And unfortunately, like, most of my markets 50% of my markets are hardcore, biggest buyer's market in history. Yeah. Okay. So we have a lot of people that want to sell, they've done well in life. They got $1 million condo in River North. Okay. And that's an impossible sale right now. There's just no demand. Yeah. Keep talking about big inventory, but let's talk about the negative aspects. Yeah. And they got kids, and they got to get out because they want to get their kids to the suburbs. Yeah. But they need the money to sell to buy up. Yeah. Is there any products right now for those people?
Sure. You can do a cash out refi, which ideally you don't want to do if you don't have to do. Yeah. You can get a home equity line of credit on your home. You can do a bridge loan, but bridge loans are kind of the thing of the past. You could actually put less money down on a current home, right? Like, that's why we talk about what sort of down payment do you have available based on your price point at the end of the day.
Are you looking at people too, just for like people that don't maybe want those risks, of saying like, okay, well, you can afford this if your condo is rented? Are those things that
100%? We do all that stuff. Absolutely. I might come back to you and say, here, Matt, there could be 3 different buyers. One, I might come back and say you have to sell your home in order to buy a new home. Yeah. One, I might come back and say you can buy a new home, but you don't have the the down payment, and that's your barrier to entry. So let's take some of the equity out of your current home.
Yeah.
Or 3, you can do whatever you want.
Yeah.
You can keep your current home. You don't need the equity. You've got the cash. I mean, we really try to look at all options. Do you have family who can help you out temporarily to bridge the gap, right?
Yeah.
50% of people say, you know what? My parents will front me the money because they know, my home's going to sell and I'll just pay them right back.
Would your parents front you the money?
They did when I bought my first place.
Did they?
I paid them back in full with interest.
What was the interest they charged you?
5%, but that was back in 2004 I bought my first place.
Yeah.
I bought a multi-unit. And yes, 5%.
Did you do articles of agreement?
Yeah, everything. Full deal,
Yeah.
reported to the IRS, everything. Paying all the money back, all that good stuff. So my dad was like, listen, I'm happy to help you, but this is a business transaction at the end of the day.
So I bought my first place in 2011.
Yeah.
And at that point, they didn't give loans to realtors because of the bubble burst and stuff like that.
Right.
I had good income, but I
Right,
couldn't
we
get
didn't
loans.
like you guys back then. Yeah.
So I took a loan out for my
Yeah.
old man had, he saved up his life.
Yeah.
And we did an articles agreement, and he
Yeah.
charged me 6.5%
Yeah.
interest.
Good deal.
And I still pay him to this day.
Yeah.
And when rates got lower, I said, "Hey, can we lower that 6.5%?" And my dad said, "You can either cash out,
Yeah.
or you could keep paying the money."
Yeah.
And he goes, "I don't care what happens, and if you ain't got the money,
Yeah.
it ain't my problem."
Yeah.
And I said, "Well, if you're a real bank, I could refinance." He
Yeah.
goes, "Well, you couldn't afford it
Yeah.
when you needed to buy it."
I love your dad.
So it's just like, and I hate him for it.
Yeah.
I really do. But I also respect the fact that it does teach me that hey, listen, I didn't have the money, and I
Did
think
you a solid.
I think a lot of people, though, unfortunately, if they get that cash, they may not understand how much it hurts to work for that type of cash.
Everybody's situation is different,
Yeah.
right?
Yeah.
Literally everybody's situation is
Yeah.
different. So, yeah.
So when it comes down to these rates, how much do you think the rates impacts? Those are people, because I think one of the biggest markets right now, in my opinion, probably the biggest market is the people selling to buy up. In the suburbs, because the suburb market is out of control. The suburb market, in my career, in fact, I started my career in 2006 in the suburbs. I hated it because literally nothing ever sold. Nothing sold. You would drive in a neighborhood, and every house would be on the market. In fact, in 7, 8, 9, and 10, because I didn't have that much business downtown, part of my business would be I would door knock. I'd go to for sale by owners because literally every house in there would be on the market. I'd knock on the door and say, "Hey, here's a pamphlet of who I am. Would you ever want to hire me to sell your house?"
Yeah.
Because you couldn't give away homes. But right now,
Yeah.
homes sell like candy. Okay,
Yes.
which I'm not gonna get my theory of why that is right
Yeah.
now. But how much is rates impacting those people from being able to buy up? Are they complaining about it to you?
No.
Not
No.
at all.
No,
Money
I
doesn't
wouldn't
matter.
say not at all, but
Yeah.
it's if a 6 or 7% interest rate is impacting your ability, like I told you earlier, you're spending too much money on a home.
Yeah.
It's more psychological for people than anything.
We see rates having the biggest impact on that first-time buyer, $500,000 and under downtown
Yes.
Chicago.
But there's
that's
great
hands down.
programs out there for those people.
What's the best program for somebody like
So
that?
if you make under $154,000 in the city of Chicago, you can get away putting 3.5% down, and let's just say an interest rate is 7% today.
Yep.
Okay, and you're buying a condo, and as you know, condo rates are higher than single-family home rates.
How much higher are they, just for everybody out there to know? Because people look online, they say it's 6%. It's normally about a half point.
Yeah, about a half a point. Call
Just
it.
make
okay?
it easy. So if you see something online, guys, it's 6%.
Yeah.
You're buying a condo, it's 6.5%.
Yeah. So, unless you're putting 25% or more down, if you put 25% or more down, then that kind of shift goes away. But if you're making under $154,000 a year, you're a first-time home buyer, you want to put 3% down, whether it's a condo or single-family home, you're getting that same rate.
Yep.
You're not getting that condo adjustment, and you're getting a $3,000 credit.
So you get that just for being
A first-time home buyer and making under a certain threshold, right? It's all about home affordability that you hear out there at the end of the day.
So is that is that only for single people, or is it a couple? If there's a couple, does that change?
Combined.
So combined is 154.
So a lot of times we'll have people who come to us and they're both working.
Yeah.
And let's just say you and your wife want to buy a home and you make $152,000 and your wife makes $50,000.
Yeah.
Right? Well, now you don't qualify for that program. But
yeah.
I'm going to come back to you and say, Matt, good news. You actually still qualify without your wife's income. You can take advantage of this program. Are you okay with your wife not being on the mortgage?
Yeah.
99% of the time, you're like, I don't care. Can she still be on title? Absolutely, she can still be on title.
I mean, to me, $154,000 sounds like a lot of money.
It is.
In a year.
It
that doesn't
is.
seem like an afford.
It is.
154,000 without having any expenses.
It
like
is.
we have
That's
running
a
business.
special
Seems like-
program we have.
seems like a lot of
a
money.
lot of times it's in the lower hundreds,
Right.
depending on where you go.
154,000 sounds pretty good.
Absolutely.
Yeah, I'm just saying.
You know,
sounds
they
pretty
just
solid.
raised the conventional loan limits, which is going to
Yeah.
help people get into
So,
the market.
Let's just so we have listeners out there just know
Yeah.
that if you make, let's say 153,000, so you're under the threshold.
Yes.
What does that give you normally? Let's say you got a good credit score and stuff. What is that purchase power? Is that a $200,000 loan? Is that a $400,000 loan? Like,
That's a good question. Let
You know,
me do
are
some
we-
quick mental math
just
here.
just for people out there knowing, like, hey, if I can afford this,
So if you make 154,000, we work off of monthly income, right? That's $12,800 a month in monthly income that you make.
sounds solid.
Okay?
Right?
In theory, you can go up to 50%, but let's be a little conservative and say 45%. That means if you're making $12,800 a year times 0.45%, your total monthly debt can be $5,760 a month.
That's got to put you.
That's
around
your
400.
housing payment. That's a car payment.
Okay.
That's a student loan payment. That's credit. Any debt that you have, you can be at $5,800 a month.
But so, like, let's say then that your mortgage payments are $3,600. That puts you around 400,000.
400,000, 500,000, absolutely.
a
I would
solid-
tell you like the 500,000 to 600,000 range,
Yeah.
depending on
It seems-
listen, are my assessments 200 a month or are they 2,000 a month, right?
I think we're talking
Yeah,
monthly payments.
yeah,
But I'm saying,
yeah.
like, even at put you at, you get the $325,000 condo, which is like your average 1 bedroom, 1 bath, $600 a month assessment, $6,000 taxes. Like, you're well under that threshold.
Great
Well
product.
you
Great
know.
product. You get that $3,000. By the way, if you're getting a 6.5% and you don't want the 3,000 in cash, you can take the 3,000 and now get yourself a 6% interest rate.
So you can buy down the rate with
You
that
can
money.
use that money to buy down your rate. I think take the cash and run because I think
I don't buy and buy downs.
you know,
right now.
I don't believe in that either. At the end of the day, I always try to sell people on don't spend money because I don't think you're going to break even on your
Not with
investment.
where rates are going
No.
right now. But so what about, you mentioned something I wanted to ask is about student debt.
Yeah.
How much is student debt playing a factor into rates? Like, because, you hear all this stuff in the news that people are like out of control student payments. Are you seeing a lot of that right now when you're qualifying people?
No, the biggest problem we've had with student loan debt is that it supposedly is going to be forgiven, right? So everybody's like, well, I have student loan debt. It's going to get blown away. I'm like,
Didn't
well,
they deny that
They
in the
denied
House?
that,
Yeah.
right? But like, this is what I've been dealing with. It's like,
Yeah.
well, listen, when it officially gets terminated, then we can exclude it. So there's different types of student loans. There's income-based student loans
Yeah.
where as you make more money, your payments increase.
Yeah.
There are loans that are in deferment status right now, which is what most people who are coming out of school's loans are.
Yeah.
And if you've got $100,000 of student loan payments and you have no payment being reported, depending on the investor we take them to, they either hit you with 1% of the balance, which is $1,000 a month,
Yeah.
or $500 a month. They take a 0.5%. So we also look at that when we're factoring out qualification. So a lot of times student loan stuff doesn't really get in the way, quite honestly.
Student loan debt is just like insane. Like
It
the
is.
interest on that stuff.
It
like,
is. It
should be-
is.
Should be illegal.
It is.
I don't think we
But
should
I
forgive
mean,
it, but,
people
like,
have,
it's like-
listen, you want to talk out of saying people have credit card debt and they don't even understand that they're paying 23% interest on a credit card.
Is that how much it is now?
Yeah.
What's the average student? Because like student loan debt, I think like,
Depends
I think
if
the
it's
percentage on student loan
government,
debt is
private.
crazy.
I mean, they could be 2%. At the end
The
of the
rates
day,
on credit cards 23.
it's nuts.
Wow.
And people don't even understand that when they're making that payment, they're just making an interest payment. They're
Yeah.
not paying down any principal at the end of the day.
Wow.
So
Are you seeing problems with student, like with the economy, even them saying it's great and everything like that? Are you seeing a lot of credit card debt
Yes.
when you're financing?
Yes. And I try to explain to people at the end of the day, if you have a credit card with $30,000 out there,
Yeah.
okay,
That's a lot.
and that thing's $1,600 a month. That's your payment on that.
What are they
okay?
buying? You get to see what they're buying?
$1,600 a month. I don't see what they're buying, nor do I care what they're buying, nor
A
do
lot
I
of
judge
OnlyFans
people what
things
they're
out
buying,
there.
right? So I explain to people, that's $1,600 a month. That's that's $200,000 of buying power. So let's pay off your $30,000 credit card debt.
Yeah.
Let's put less money down.
Yeah.
Let's reduce your overall monthly exposure.
Right.
And that's how we get around qualifying a lot of people. You really have to take a holistic approach when you're qualifying borrowers, right?
Is that been like out of all the things you're seeing right now, qualifying people with where the economy is and everything like that right now? What's the number one negative? Is it credit card debt? Is it student loan debt? Is
Cars and credit cards.
it cars and credit cards? Like
Cars are very expensive.
So are people? Is it
I mean,
the
I
rates
see
on cars?
I see car payment, well, the rates and what people are spending on cars too.
What's the average spend you're seeing in cars?
I mean, I don't know. I don't know if I know the average. I would say $800 a month, but
Wow.
I see people with $4,000 car payments.
Really?
Oh yeah,
Wow.
yeah, $4,000.
What
a
kind of
month.
car is a $4,000 car?
You know, a
Like a Bentley?
Mercedes,
No.
a Bentley, absolutely.
Mercedes not 4,000.
You could go buy a $150,000 car. Forget what kind of car it is.
Yeah.
And your payment, and you're leasing it, and
Yeah.
your payment's $3,600 a month on that car. I see it all the time.
What business do you? Well, I mean, I don't know. I don't know. It seems crazy.
My man, like
seems like-
I get it, right?
I do pretty decent life. 4,000 seems pretty high.
You know,
just
I'm,
wouldn't be able
I'm
to do
not
it.
a debt guy, and
Yeah.
even though I sell it at the end of the day, so
Yeah.
you know,
Wow.
I don't understand. But people like to lease cars, but leasing
Yeah.
cars aren't cheap. But you know, now you're seeing all the manufacturers come out. Take BMW as an example.
Right.
You can go buy a pretty nice 5 Series BMW right now.
Mm-hmm.
You can put $3,000 down and make your payment $600 a month. Why? Because there's 8 million cars sitting on the lots that nobody can sell.
Yeah, well, I bet you a lot of this is my theory on the car thing is like I remember in 20 and 21 like there was no cars and they were like
I mean,
I leased cars for tax purposes for one of my wife on one of them and the payment was like way more than I've ever seen.
Yeah.
And I renegotiated it because
Yeah.
it's like to do and I got it down by like almost half.
Yeah.
Because it's like I'll just trade this thing back in.
Yeah.
And they're like, well, keep it. But I was like, maybe people are just locked into that. Is that what it? Cause
yeah,
like now it
people
seems
don't
like
know how to
cars-
refinance a car loan either.
Yeah.
Quite honestly, at the end
Yeah.
of the day, they
Yeah.
just don't think you can refinance a car
Everything's
loan.
negotiable.
So, yeah, but now you're starting to see some offers be. I mean, now you go look at dealerships and they're packed.
Yeah.
With cars on the lot.
Yeah,
I mean,
because they can't give 'em away.
How crazy was that in the pandemic when you're driving by these dealerships and there was not one car in the parking lot?
Well, I'll never forget that when I got my first time I got leased a car for my wife is I bought her like a used Tesla.
Yeah.
And, John Paul and the team wanted to buy it. So I sold it to John Paul for more than what I bought it for. So I made money after her having it for a year. And then I just took that money and just like leased her a car. And at that point, like you had to wait like 4 months to get
Forever.
it. Which I couldn't. And
Forever.
now they're calling me nonstop. Like, you want to trade it in? You want to trade it in?
Like,
You wanna
look at
trade it
what's
in?
happening at Tesla.
Yeah. Well, Tesla's.
Thanks to the
Elon's my
Hertz
guy.
CEO, you know.
Hey, listen.
Right, so-
But like my point is like I didn't know that car debt would have that much of an impact on it.
100%. We look at everything. You know,
Can
at
people
the end,
refinance their cars to
Yeah.
get better loans?
Sure.
You just go in and talk to them about it.
Yeah. I can't refinance. I don't do car loans.
So what do? You
thankfully.
call up the bank and you're just like, hey, I want to
Yeah,
trade
you
it
call
in?
up the bank or you call a credit union or you call anybody at
And
the
you say I
end of
want
the
it
day.
for cheaper.
Yeah. I mean, you don't really see that happen very often. It's more of a situation of if you lease a car,
Yeah.
you cannot pay off a lease to exclude the debt when you get a
Correct.
mortgage.
Yeah.
But if you own the car, you can pay the car off and exclude it. Or we will have people pay down a car loan
Yeah.
so that they have 10 payments or less. Because if you have 10 payments or less on a loan, we can exclude the debt completely.
Wow.
So there's a lot of tricks and trade on what
Maybe
we
we
do
just
to
gotta get people to
qualify.
not feel uncomfortable about negotiating. You know what
Listen.
I try to do to people. So when you can negotiate wine at restaurants. You ever do this before?
No.
Yeah. So you want to feel really uncomfortable.
Really?
You want to make everybody uncomfortable. It's like you get the wine list, right? And it's an expensive bottle, and I'll be like, listen, it's like a $600 bottle. I'll be like, I'll give it to you for $200. And I'm like, what? I'm like, yeah, let's do $200. And then like everybody at the table just like what is this guy doing?
You actually do that?
100%. I do it. I will never pay sticker price ever.
No
Ever.
way.
Never. And I'll never forget. I was at a very.
Let's go out to dinner. I want
Yeah.
to see this in
Oh my
action.
God, dude! People get uncomfortable, right?
I don't-
I'll do this with people I've never met before. You go to the dinner, like I don't do dinners. Okay, I said this on other stuff. Like I don't
Yeah,
do them.
yeah.
But once in a blue moon, I'll go out and like I'll do it, and people are just like. You could feel how uncomfortable, and then the waitress is uncomfortable, and then they bring the sommelier over, and then I talk with them. And the thing is, I know the product, so I'm like, I know this retails at X, and I know that you got the retail for cheaper, and I know what the markup is on this. And I'm like, you want to sell that bottle that's been sitting there? I'll take it. And I win every time. I always get it at a discount.
Good for you, man.
But I'm saying like people got to feel uncomfortable with negotiations. You know what? I do this to my newer guys too. It's like it's a long line at Starbucks, and I say just ask them that you get 10% off, and then start arguing with them at the counter. Right? Because you got to make, like, negotiations is very confrontational and very uncomfortable, right? And if you're uncomfortable in that, like what client's ever going to try? Like in my opinion, the reason people hire us is to negotiate on their behalf.
Yeah.
So we're put in a shit ton of uncomfortable positions.
Yes.
There's a lot of times you tell me I got to do something and like,
Yes.
I know I'm like, oh,
yes.
God, I don't want to make this call, right?
Yeah.
And I'll never forget when I was a kid, I used to cold call. And I'd have to hype myself up every time because I was so nervous to get told no.
Yeah.
Now I'm like in the position, like I don't even think like that anymore. Like, whatever. I'm going to get yelled at and screamed at. And like, now I want to fucking win. Because I'm going to make him more uncomfortable because I know he's probably not going to be as comfortable as I am. But I think you got to get people to be in that. And if you're got these loan payments, you know what? You want that house.
Yeah.
And if payments is the thing, you got to step out of your comfort zone.
So, I mean, I always preach to you about this. There's just so much homework you've got to do up front. That's why I practice and I preach and I say you can't ever figure out getting qualified too early. I don't care if you're buying a house tomorrow, a month from now, a year from now.
I think the more you know, the better it is, right?
100%. I tell everybody, you are never going to get pre-approved and come back to me and say, I really wish I didn't go through that process.
Right.
I'm really upset that I'm educated and I know what I can or can't do at this point.
I tell people all the time, you can always go up, but you can't go down. Meaning that if you tell me you got $1 million budget, and then you get approved, and you can only do $700,000, you're renting another year. You can't go back from there.
Correct.
You know. So when people are like, "Well, I'm 6, my lease is up in April.
Great.
Why should I get approved now?" I'm like, because if you think your payment should be $4,000, why don't you talk to somebody? Because there's closing costs. Are pretty expensive.
Yes.
Which brings me to really quickly because we got to start wrapping up here in a minute. But like the closing cost aspect is how many people call me a week, I would say, and say, hey, and they're not people that get pre-approved for this. I'm not saying you guys do a bad job, but a lot of people in other places, they'll be like, it's a $300,000 account. Like my closing costs are $15,000.
Yeah.
Why would it be $15,000?
So here's the problem with the disclosures. And you and I have talked about this several times.
Just reminders out there because I get this so many times.
Several times. The documents are very misleading, okay? So at the end of the day, let's take a $300,000 condo,
right?
Okay? You're going to pay $2,000 in city tax. You're going to pay $5,000 or call it what, $3,000 in title fees. So you're at $5,000. You're going to pay an attorney $750. You're going to pay a lender $1,640. You're going to pay an appraisal. So call it you've got $8,000 in closing costs. Okay. Then what happens is you get the documents and it says your total closing costs are $15,000.
Right.
Wait a minute, Ben. You just told me they were $8,000.
Right.
Okay. There are things which are called hard costs. And there are things which are called soft costs.
Right.
Okay? Soft costs are you've got to pay your insurance 1 year in advance. You have to bring interest for the remaining days left in closing. You have to fund your escrow account with your property taxes and your homeowner's insurance, et cetera. So what happens is it wraps everything in and says your total closing costs are $16,000, which they're really not.
Right.
They're still $8,000. But the document just kind of rolls them all up into one. And as you know, when somebody's looking at a budget or they're looking at a closing cost sheet, they go straight to the bottom line.
That's it. Nobody
they
looks at
don't
anything
read
else.
anything.
Yeah.
Straight to the bottom line, right?
So where do those costs go if they're not paid then? When are they paid monthly? All those other costs?
Well, the hard costs are one time. You never get the money back. Soft costs is still money you're bringing to the table.
Yeah.
Right? So, but they're not a closing cost.
Yeah.
Your homeowner's insurance is not a closing cost.
Right.
Your interest is not a closing cost.
Right.
You close on the home on the 15th of the month, you pay the remaining days of interest.
Right.
Your taxes that we collect from you for $4,000, that is your money. They are collecting it from you. They are putting it into a holding account. So when your bill comes out, they're going to take that money to pay your bill.
Yeah, I think the problem is that people get sticker shock, right?
They do. And again, you and I talk about this a lot, and we've had friendly battles with this a lot, right? We've even taken it to the point where we now...
We both like to argue, though.
So we do like to argue, and you're always right. Well, you think you're always right. And we even break it down to, like, here's your hard costs, here's your soft costs. And now, because of the feedback that you and I have had, I said, look, the documents are going to say your closing costs are $16,000.
Right.
They're not.
Right.
Okay?
Right.
Trust me, they are this.
Right.
So we try to be as clear as day when it comes to that.
Yeah, and it's been a big problem with a lot of closing statements. There's only one other thing I gotta add because we gotta get moving here. But what is one thing to tell all of our condos? We were talking about condo departments earlier.
I'm glad you brought this up. We don't have enough time, but go.
And condos have been incredibly difficult to loan because of this incident called Surfside, which was an absolute tragedy. Like, I mean, I don't think anybody in here can ever say that they. Like,
No.
I hope that never happens to anybody.
No.
It's a terrible, terrible instance.
No.
But as a result of Surfside, they've put in some new rules on condo buildings.
Yes.
Which have gotten a little bit extreme, meaning that, like, if there's a chip in the sidewalk out front,
Correct.
you can't get a loan in a building anymore.
Correct.
Which doesn't really make any sense to me. Why? I feel like it's just been this year that it's gotten so much more extreme. Why is it this year compared to last year? And Surfside was a few years back at this point.
You have Fannie and Freddie coming in like the mafia,
Yeah.
right? And if
kinda are the mafia.
if there is any sort of stick on a condo deal, and we got in some battles early on this,
We did.
and you accused me of being the
Being
worst
terrible at
lender
his
in the
job.
lender, and I'm
Well,
like,
I accused him of being the number 3 lender instead of number 1
yeah,
lender.
yeah.
That's what I did. I said the number 1 lender could get this done.
Yeah,
Number 3 can't.
And trust me, I like to close a loan just as much as you do, if not
Yeah.
more. So at the end of the day, you've got the main sticking points are critical repairs,
Mm-hmm.
code violations, deferred maintenance, budgets not being properly budgeted. You've got master insurance. Master
Insurance has been a
insurance is
huge problem lately.
Master insurance is a massive problem. You have insurance costs that are through the roof.
Right.
You have the HOAs that don't want to go out and get the updated insurance,
Yep.
pay the premium, charge you an extra $20 more for every unit owner to cover that delta.
Right.
So that's at the end of the day the biggest problem. You also have lenders out there, and I'd like to say, contrary to what you might believe, is I think that we are a relatively condo-friendly
Yeah.
lender.
For the most part.
You have people out there who are the biggest problem we have right now is you have people out there going to the big banks, okay,
Yep.
or mortgage companies that don't know what they're doing. They don't have the reps and the warrants to underwrite and approve the condo like we do. And this is me not being egotistical. This is just a fact. Somebody will come to me and say, I went to, X bank to get a mortgage. They're having a problem with the condo at the end of the day. And I said, great. I go and I immediately check the do not lend list on Fannie and Freddie. If it's on the do not lend list on Fannie and Freddie, you are done.
Yeah.
There is no loan that can be had unless it's some portfolio lender that is willing to turn a
But
blind
can't
eye.
somebody petition these things? Like some of these like Fannie Mae will put something on a do not lend list. Literally, I've seen this. Because the sidewalk up front was torn up and somebody tripped and fell on it.
Yes.
So now they won't give a loan in it. And
Correct.
it's like somebody fell on some sidewalk. Like I hate
Correct.
to say it, but like this is a big city. Like I'm
Correct.
not saying I don't feel bad that person fell, but like my kid falls all the time. I'm not suing some people.
Correct.
Like so like now you can't get a loan in that building, and then everybody's value.
Well,
drop
so the
because of that.
problem is, you've got all these lenders that don't know what they're doing. They're disclosing more information than they probably should be disclosing, right?
Can't you
It's
fight
just
Fannie or Freddie
It's
on
just
that,
like just like lenders don't want to see inspections. Imagine if we saw every homeowner's inspection.
Right.
We would not lend on one single home.
Right, but I'm
Literally.
saying like some of the stuff.
So
like,
yes, you can overturn it. You can fight it. I'm helping a client right now in California. He went to Wells Fargo to get a mortgage. They said no. Was on our approved list. I'm like, it's no problem for us. We're good with the master
Right.
insurance. Then I talked to the buyer. He wanted to go to Zillow Home Loans to get a mortgage. I said, guys, be very careful. I don't think Zillow Home Loans at the end of the day is good at condos. I don't think most people are good at condos at the end of the day. Went to Zillow Home Loans, couldn't get a condo.
Yeah.
Finally comes back to me. Now I'm ready to use you. I'm like, all right, let's go. We got to move really, really, really quick.
Yeah.
Why? Because I'm afraid that whoever you've spoken to is they uploaded stuff to Fannie and Freddie, and in 24 hours, all of a sudden, this thing might show on the do not lend list. What happens? Boom.
The problem that
So-
I have is that like, I don't think, I discourage buyers from buying into a place if it's like a detrimental problem, right? But like,
Yes.
they're like, give you an example. There's a building where, there's an incident and somebody got killed. And now everybody's values are plummeting because of that, because you can't lend in there because the association's named in it. Now there was they lost the case against the city. So now I don't think that affects the value of the places, and I'm like, hey, if we got money escrowed, let's say that the lawsuit is this, you know what the lawsuit cost is, and we got our portion percentage in, God forbid they had to pay everything of it, but no bank will loan in there.
Well,
Why is that?
it's more about the insurance that the association has versus the reserves that the association
But
has.
I'm saying even if somebody's putting the money aside, what's it matter?
Well, litigation is a little different than critical repairs and code violation.
Yeah.
A lot of times you can't actually lend on that, right? Unless it's on the do not lend list. So we will fight with Fannie and Freddie, and I will go to you and say, Matt, I need you to provide me X, Y, and Z so I can build a case to go to Fannie and Freddie. And sometimes you can get them to reverse it, but it's challenging.
You look at these ones like there's a building down the street. Now nobody can get a loan in there. The balconies are getting redone. It's already it's $3 million. They know what
Health
the
and
cost
safety.
is. but the balconies are getting done. Okay.
I know.
And the seller's paying the cost.
I understand.
So the buyer's willing to buy into it.
I understand.
And it's a balcony issue.
But it's a safety issue.
But nobody can get
It's a
loan.
safety issue.
I
Fannie says, fine, Matt, come to me when the balcony's fixed.
But it could be 2 years because of Chicago
Understood.
weather. So I also look at I represent a lot of sellers. I look at my sellers. I'm like, this is terrible. Like you literally just lose. Think about this. Fannie Mae is taking away maybe as much as 20% of home values away from people because of that.
Don't even get me started.
This
is why I tell every agent that I interact with these days, I don't care if you're a buyer's agent or a seller's agent.
Yeah.
When you get ready to list a condo, which you guys do a pretty good job of,
I think we're
you come to
fantastic,
me
yeah.
and say, Ben, anything I need to know about this building. Because why are you going to go waste your time and your client's time if this thing's on the do not lend list?
Right.
Even if somebody is willing to give them a mortgage, that mortgage is going to come at a premium and it's going to scare that buyer off 9 out of 10 times anyways. And that buyer's going to say, why would I want to buy in a building where nobody can get a normal mortgage on?
To me, though, if I was an owner, and we represented an owner in a building that had the valet was suing the building for missed payments. And nobody can get a loan in there. The values have plummeted because of that.
Did I say we can't get a loan in there?
Yes. We shopped it to you guys.
Interesting.
And my point is, I personally, I got to tell you, if I lived in that building, me personally, I would sue the valet, I'd sue Fannie Mae. I'd be like, listen, this is ridiculous that you cost me money because of a valet. That makes no sense. Just logically in my head, I couldn't imagine losing 20% of my value because of Fannie Mae's miscalculation of what that can mean.
There is a business opportunity out there right now to be had.
Yeah.
Okay.
I don't have the means. Or
you don't have the
bandwidth,
means. You don't have the bandwidth.
Yeah.
Neither do I. If we could figure it out, you and I would go to every single association and see. I'd say, Matt, here's 28 fractured condo projects right now.
Right.
We need to go to these HOAs and we need to say these are the 3 things you need to do
Yeah.
to make your building marketable again.
Yeah.
If we only had the manpower and the staff to be able to do that, but that is if I can somehow retire from mortgages one day, that is going to be my full-time job. I'm just going to be a consultant.
But I'm saying to me it's our whole industry got sued because you signed a listing agreement saying we got paid money, and you agreed to pay us the money, and then you sued us over it. But I can't sue because some off the wall federal government doesn't want to give me a loan because a valet wants to sue my building, so now I have to lose 20% of my home value.
It's
20% is a lot more than 2.5%. I'll tell you that right now.
It's
and people
really,
are okay with that. That's
really
what blows
sad.
my mind. Blows my mind.
Surfside. Nobody should have been
tragedy.
lending on that, right?
100%.
That building
But
was
those are
literally
real
falling
problems.
down. 100%.
Those are real problems.
We've always had problems in Florida.
Right, but we're not talking about valet suing. We're not talking about a wrongful death or something
you
like that.
see all the buildings we work on out here, and sometimes
or a riser
you and I
project.
scratch our heads. We're like, really? You can't get a loan on this building?
Right. That's what drives me crazy.
Trust
me. Drives me
Me
absolutely
too, which
insane.
is why we do the homework up front.
Yes.
I might tell you no right off the
Yeah.
way. You might get mad at me right
Yeah.
out the way, but it's better than
I don't
calling
get
you
mad.
the day before closing
even.
saying this thing. You get it. So I don't know how much time you have. I don't know if you want to talk about products. We can do other stuff.
We got to wrap
it up. You're cutting me off.
We got to wrap up.
Maybe you'll have me back in
8 months.
less than 8 months.
We got to do the number 1 and number 2 lender, and then we go back to the 3.
Great.
We're on a rotation. Top 2, and then eventually we squeeze in the top. Top 2, you got priority. 3, it's get thrown down the list a bit. Where can people find you?
BenCohenLens.com.
And that's COHEN.
COHEN lens.com.
And rate.
Or you can just Google Ben Cohen Mortgage and you'll find me pretty easy.
Man, look at that's a power play. Just Google me. Does Toledo, Ohio come up when that happens?
I don't know if Toledo, Ohio comes up. I hope it does, actually.
Okay. All right. Well, that's all we got for you. If you guys have any lending questions, you can always get a hold of Ben, or if you need some help, you can always reach out to me and I can introduce you. But thanks for listening to Laricy Live.
Yeah. Thanks for having me, Pat.